Tesla ended the day down 1.5%, but I still think that there's a high chance that price is going to move its way back up to test $215 to $220 within the next 7 to 10 days. But I do believe that price is probably going to sell off one more time. We're going to go over in this video what I think that level is going to be that we finally bounce at to move us back up to that $300 target that I have by the end of the year. Now, the first thing I want you guys to know is that I do have a couple of positions open on Tesla. I still have my December $260 calls open, which I added to my position last week. I also have cash secured puts. Strike price is $190, expiring this Friday, August 16th. My goal with those cash secured puts is obviously to get the premium, but if price does sell off, I don't mind owning those shares at $190 because of the setup that's currently in play. If you guys have been following me for the past couple of months, you know that we played this massive Tesla breakout from about $180 up to $268. We were calling that out for a very, very long time. We were expecting price to pull its way back down into this market bias indicator and bounce off of that 220 level. But then something fundamentally changed within our plans. But then something within our thesis fundamentally changed, which was the robo-taxi event getting pushed back. You can see that as price was selling off here, the BX trender is making lower highs and lower lows. This is very, very bearish. It means that while the overall trend is still bullish, there's not enough money coming in to actually get us to bounce off of this level. Now, at the end of July into early August, we're expecting price to push max back up to 240, 244, but then once again sell off. The low that we are expecting this to hit was between $190 to $200. And there's a couple of reasons for that. The first one is that if we zoom out onto the weekly chart, that is right where the weekly market bias is sitting. And in most cases, this is going to act as resistance and support. And the stronger reason that we thought price is going to bounce off of that level, which also correlates with the market bias, is that if we take our most recent swing low of $170 up to most recent swing high of $265, we're going to notice that the golden pocket between the 0.618 and 0.786 is sitting right between $205 and $190. This is our institutional buying area. This is basically when Wall Street is allowed to start buying in that pullback. And in most cases, price will bounce off of this level. The most optimal level to bounce would have been right here between 185 to 190, which is called the smart money level. And this is usually going to be the optimal long entry, which is why we've been selling cash secured puts into that $190 level. Because if we pull back into 190, they are going to be there to buy it right back up. And if they're not, then this whole trend is going to shift. And I don't think Tesla's going to hit 300 by the end of the year. Now, what I'm expecting is for price to push its way back up into 212, 216, 220 to test this market bias. I don't think we're going to quickly fill this gap back up here by 248 within the next month or so. I'm expecting a push up, a potential rejection to test the smart money level once again, worst case scenario 188 to 190. And I do think from there that price will bounce off of that support, and that could be the trajectory to start moving us back up to 240, 260, and 300 by October, November, and December. And so my plan for now is to ride my calls back up to $220 within the short term. Whether I'm up, down, or barely green, I'm most likely going to close them out and roll them out to something further, such as February or March calls. I will also probably open a short-term Tesla put position to hedge against my long position, setting a stop loss at a break over 235 with a take profit down at 188. Once price breaks over 235, there's a very high chance that we're going to run up to that $300 level, and I can pull the short off and stop hedging out my positions. The other thing that I'm doing in the meantime is I'm selling cash secured puts at $190. This is great if you have more capital and you're looking for a more conservative return within a week of about 2 to 4%. What I'm doing is selling cash secured puts for that 190 to 195 level. And all that means is that this Friday, as long as Tesla closes above 190, I'm going to make my premium. The premium is going to be a 1% return on my capital. It doesn't sound like a lot, but at the end of the day, for letting price basically consolidate, it's a pretty good way to make some money. If Tesla pulls back into that 190 level, then I am forced to buy shares in Tesla. It's not an option, I am forced to. This is why it's cash secured. I don't mind doing that though, because I would like to own Tesla shares inside of our smart money level. And this is where my system is really solid, because what we like to do is sell cash secured puts into the smart money level, collect premiums along the way, wait for it to hold within that level, bounce off of that support. Then once the market confirms the bottom, we shift into an aggressive bull stance, and then we start to play directional options and shares to the upside like we're going to do by the end of this year. Now, all of this will go out the window if we get a lower low on the BX trender and price breaks under $185. So we're going to have to see what happens over the next couple of weeks, but in most cases, price will continue its way up to 220 before rejecting. If you guys want to learn my two-step trading system, go check out all of our free courses in the description. The one that goes over the trading system in our indicators specifically is the market bias course, but all of our courses and all of our resources are free in the description. And if you want to trade alongside of me and our private academy each and every single day, you can become part of our private mentorship group. The link to that is also in the description. Thank you guys for all the support. I hope you had a great week. As always, use proper risk management. I'll see you guys next time.